I'm here to discuss Fringe Benefit Tax with BDO tax experts Sandita Singh and James Peck. Hello, how are we?
Good, thank you. How are you?
Good, thank you.
Good, thanks, Maddie. Thanks for having us.
Sandita, I understand that some benefits given to staff can be taxable, but only under a certain set of rules. Can you please explain those rules for us?
Sure. The most common tax regime that taxes benefits to employees is known as the Fringe Benefit Taxation Regime, or the FBT. But it covers non-cash benefits payable to employees. If you pay a cash benefit to an employee, such as a cash bonus at the end of the year, then that's subject to PAYE. On the other hand, if you are providing, say, a Christmas hamper or a gift voucher, that's taxable under the FBT rules. So that can sometimes trip people up as to which regime it belongs to. And when it comes to allowances, they generally tend to be cash payments, and they're actually in the PAYE regime as opposed to the FBT regime because it's effectively cash, not a non-cash benefit. With allowances, however, you've got to be, an employer has to be quite careful because if an employee is able to be given the allowance without tracking whether it's for work or private, then all of it would be subject to PAYE.
Okay, Sandita, what are some of the common errors that businesses make and should be mindful of when they're assessing those rules?
Yeah, sure. With regards to vouchers and gift cards, they're known as unclassified benefits. So there's this particular exemption for small value unclassified benefits, and people tend to get that quite wrong in interpreting it. So what these rules say is that if you are providing unclassified benefits of less than $300 per employee per quarter, you don't have to account for FBT. That's the first limb. The second limb is if the total benefits provided to all your employees in an income year is more than $22,500, then you would need to account for FBT on that. So what employers tend to do is look at the first threshold, but forget about the second one. With regards to the first threshold of 300 is actually total benefits provided to employees, not just a single benefit. So, for example, if you're giving an employee a $200 voucher followed by a Christmas hamper, followed by a gift card, and in totality that exceeds 300, then you're actually accountable for FBT on that. So it's important for businesses to seek tax advice, especially if you've got a large number of employees, to make sure that you are not over the relevant thresholds. The other common error is around motor vehicles and around the exemptions available around that. One of the most common exemptions is a work-related vehicle, and James will talk more about that. The common misconception around work-related vehicle exemption is that if you are a work-related vehicle, it's not caught within the FBT rules at all. That's incorrect. Actually, if you have a private use benefit of that vehicle, availability for private use, then you're actually within the FBT rules, and you actually need to consider the number of days that work-related vehicle has been available for private use. And James will talk a little bit more about the motor vehicles and FBT.
Okay, James, explain this in more detail for us. We know that motor vehicles are a common benefit given to employees. What are the rules that businesses need to be aware of surrounding them?
Yeah, certainly, Maddie. This is a really key focus area of Inland Revenue. We help clients go through risk reviews, and this motor vehicle issue comes up a lot. Availability for use is probably the key thing about whether a benefit arises that could be captured under the FBT regime. With availability for use, the key is, have you restricted your employee from being able to use that vehicle? So have you given them, say, a private use restriction letter? If so, then potentially it's not available for them to use. What we do see quite a lot of, though, is employers requiring their staff to take the vehicle home for security reasons. So you might have an office manager with a car, and that car goes home each night because there's nowhere safely to park that on premises. Previously, we used to say that was really a business benefit, what was happening with the travel of that vehicle, where Inland Revenue have recently sort of clarified in their guidance that the private benefit is more than incidental, and therefore taking it home can still be subject to FBT. There are some other exemptions that we need to think about with motor vehicles. The most common one is the work-related vehicle exemption, and this is really relevant for more your tradesperson type vehicles like, say, vans, utes, that type of thing, which aren't principally designed for carrying passengers. The work-related vehicle exemption allows you to take the vehicle home, but basically any other private use must be prohibited. So you can just take it home, or any incidental like picking up the milk, say. But anything other than that would still be subject to FBT. So you've got to be really tight around the sort of wording of when they can use that vehicle. What we do see a little bit of is you might allow them to use it on the weekends, and then you could have like a 2 out of 7 FBT scenario for a work-related vehicle. There are some other criteria to meet for it to be a work-related vehicle, like sign writing. It can't be a car, like I mentioned, so just got to be really careful around that. One of the other key ones in terms of the security use issue is the emergency call-out exemption. So if you need an employee to take a vehicle home because they might be required to attend a call-out, there is a specific exemption there. But the thing that gets missed with that one is only when you attend a call-out. So if you take it home in anticipation but you don't get called out, technically that would still be a day where the vehicle is available for private use. So that's something that I do see get overlooked, and particularly these reviews I mentioned, that comes out. The other one, which is probably interesting, is can we argue that home is a place of work for the employee and then they're just traveling basically from workplace to workplace? And if so, well, then there's no private benefit because I'm not traveling to home in that case. But home can't be, like, you can't work there as a personal choice. There's got to be compelling reasons for doing so. It's quite common in like an itinerant worker setting. Say you had like a physio or a care person who's going to different job sites each day. Typically that would be where we could argue that home is a place of work because they're not going to a base each day. So I guess that are some of the key things to think about with vehicles.
So a lot of detail, James, on motor vehicles, but what if an employee is given an e-scooter or an e-bike?
There's been a recent legislative amendment here where an employer can provide a bike or a scooter or the electric variety, and as long as it's mainly for the purpose of commuting to work, then that benefit won't be subject to FBT. What's going to be really interesting is how Inland Revenue police that. There's also other rules associated with the provision where it might be under a salary sacrifice arrangement where an employee can effectively pay for that e-bike or scooter from their gross salary and wages without any tax being deducted. But that's a bit of another topic. But yes, there is the ability to provide a bike or a scooter without any FBT implications.
Fascinating. So much to think about as it relates to motor vehicles. But Sandita, I understand that there might be some proposed changes to how the FBT applies to motor vehicles. Can you explain that for us?
Yeah, earlier this year, the IRD released a consultation paper around options for change around fringe benefit taxation. And that paper is certainly looking to change how FBT and motor vehicles interact. They will get rid of the work-related vehicles exemption altogether and actually effectively introduce somewhat of a new approach. It's a remuneration-based approach, and the question is whether or not the vehicle you're providing is a perk vehicle. So it doesn't actually talk about availability for private use. It's at the very start of your particular employment relationship, whether or not the employee would consider that vehicle to be a perk vehicle or not. So it's really simplifying the FBT application to motor vehicles. But what it does mean for employers is that you are now getting away from counting the number of days of availability for private use. You're getting into a more sort of holistic interpretation of whether or not the vehicle is a perk-related vehicle. And I guess from a policy perspective, it evens out the approach and makes it simpler to apply.
So just to clarify, this is still a proposal at this stage?
Yes, correct. It's definitely not law yet, but it is a consultation document that has received submissions. We don't know yet the status. So it is a watch this space, and hopefully we'll hear more in 2026.
James, just quickly, what calculation methods are available to businesses as it relates to the fringe benefit tax?
Yeah, Maddie, I think historically businesses would apply the single rate option and basically tax all of their benefits at the highest rate available. And that rate basically reflected employees taxed at the highest tax rate, which used to be 33%. With the rate increase to 39% for individuals, the FBT rate has also lifted. But there's not particularly that many employees in an organisation who may be earning that level of income. So now businesses are looking at, are there different calculation approaches to reduce how much FBT they're paying rather than taking the simple option of applying the single rate. So there are some alternate rate methods where you effectively attribute the benefits to the specific employees and work out what tax they should pay based on their marginal tax rate position. That sounds like a lot of work, and it can be, but there is some software available to support with that calculation. Inland Revenue have also released 2 sort of shortened versions of the alternate rate calculation. One where you can split employees effectively into pools based on how much they earn, and the other is taking some of the more non-attributed benefits, taxing those at a lower rate, and the attributed benefits like vehicles and health insurance at the higher rate, and sort of a hybrid approach. But you're seeing more people using the alternate rate options.
Thank you so much. That was all incredibly helpful and useful information for business owners. Appreciate your time.
Thank you.
Thank you.